Hello, everyone. This is Simon with AvaTrade. Welcome to our webinar, Mapping Out Your Week Ahead. And as usual, I'm using the quote of the traders when they say, you plan your trade, then you trade your plan. And this is the way I think things work in life. When you spend a little bit of time of preparing yourself and making a plan, making a structure of your actions, you have better chances to succeed. Few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I've been involved with trading since June of 2000, so it's almost 26 years in June. I did it for about 11 years, intense prop trading, and then I moved on to a different way of trading. I also started to mentor and educate others, and I'm very happy to have this opportunity to be assisting our customers at AvaTrade. The agenda, as usual, the agenda of the webinar will speak about indices, stocks, commodities, Forex. We'll take a look at some fundamentals. As usual, I prepare some screenshots of articles with some key information there. We'll take a look at economic calendar. We'll take a look at other important fundamental things. And then we'll move to the trading terminal to see things from the technical perspective, and we'll go through the instruments one by one. Also, we have a list of winners and losers for the week. We'll take a look at those and try to analyze them as well. That's it pretty much. Let's start. Before we start, a risk disclosure. You can find the full statement at avatrade.com. And of course, everything we do here is purely educational. We do not suggest any trades. We don't give any trading signals. One more thing, the social media. You can follow us on Telegram, X, and YouTube. As usual, I said, the YouTube is my favorite. You have tons of information, including educational material, tutorials, webinars. So if you miss the webinar, don't sweat, don't stress. You can find a convenient time for you and just go and watch the webinars whenever you like. All right, so we are in the war, right? It's been 2 weeks. We started a third week of the war in Iran. A lot of things, and of course, the markets are reacting to the downside. And more than that, oil's been super, super jumpy. We'll take a look at the charts. As we know, the oil jumped right at the beginning of the war, and then I think we've reached on WTI crude around $120. Then we went below 90, and so on. So we'll take a look at the chart when we get there. Now, the articles like this started to pop up, and the title here is S&P 500 Nasdaq face a lost decade as 2000 dot-com bubble parallels turned real. And I think this is the key point here. The internet bubble peaked 26 years ago this month. The most important lesson from the irrationally exuberant time is that overvaluation can lead to below average returns for years and even decades. And what they say here, that the current stock market valuations are almost as high as they were in March of 2000. I came to trade, as I said, I came in June, right after this sell-off started. It was a crazy time. Things were just falling. I remember my colleagues were just screaming, short everything with 4 letters. We used to trade NASDAQ only. So any stock trading on NASDAQ was just sell in the morning, cover it before they close. We couldn't hold it overnight. It was day trading. Okay, so this is something to think about, right? Now, here's a shocking one. It was unthinkable a couple of weeks ago, but could the next move by the Fed be a rate hike? And the key points here, soaring fuel prices have led derivatives traders to price it in a roughly 25% probability of a Federal Reserve interest rate hike this year. Most economists anticipate the Federal Reserve will hold a rate steady next week, which is this week, right? Adopting a wait-and-see approach, Federal Reserve officials are closely divided on whether to look through the oil price shock, or consider it an appropriate risk. All right, next. This is very interesting. I think this is a big warning for Iran. The U.S. has attacked Iran's Kurg Island. What it could mean for oil prices. So far, actually, they attacked the military things on the island. They didn't touch anything to do with oil, but I think that's a big warning here. The U.S. strikes military target in Iran's Kurg Island, destroying naval mine and missile storage sites while preserving the island's oil infrastructure. Kurg Island shipping 90% of Iran's oil exports is an economic linchpin. Iran has threatened retaliation for any oil facility attacks. U.S.-Iran tensions could drive oil prices higher and impact Strait of Hormuz shipments. All right, let's see. We could see that gap up in oil after this. And I think this is the last screenshot here. Think Russian oil will calm the Iran conflict supply panic. Here's what the math reveals. Russian oil can reach markets first. The Iran conflict supply fears, however, are much bigger. And it's right here. This is the key point. They actually lifted some sanctions on Russia. Let's read it. The U.S. temporarily authorized the sale of 120 million to 130 million barrels of Russian oil already at sea until April 11. The closure of the Strait of Hormuz has halted 20 million barrels of daily oil transit, causing significant supply disruptions. West Texas Intermediate crude oil price have climbed by 47%, and Brent has risen by 42% this month as of Friday, prompting emergency reserve release. All right, so based on these things, we are worried here about the possible bubble, right? Sorry for the flipping. Okay, possible bubble here, possible interest rate hike, and it's all about oil. All right, this week we have the decision of the Feds on the 18th. They're starting on Tuesday, and on Wednesday there's an announcement. As of now, as you could see, the almost 0% probability of the rate cut. As you heard a minute ago, there's a possibility, not this meeting, most likely, but in the course of the year, we might see actually some rate going higher. So as of now, 1.9% probability, 98% staying the same. We have a busy week, right? As you could see, I have 2 pages of economic calendar. I couldn't fit it in one. So before we go into it, just to explain to people that are new to it, this is economic calendar. It's a public information. You can access it on our web trader or the app, or just Google it. I think every trader, every active trader should be aware of these things ahead of time, so you wouldn't be shocked or surprised by certain volatility on the market, spikes, and so on. So these are the things for this week. I only take out the high impact events, and the times are GMT. Monday, we start with industrial production and retail sales from China, CPI numbers from Canada. We have interest rate decision also from Australia scheduled for Tuesday, followed by the statement and press conference. Wednesday is the day, right? Not only we have the announcement, we also have PPI numbers. We have interest rate decisions from Canada as well. Wow. We have followed by press conference, and of course the FOMC decision on the interest rate, and as usual followed by press conference of Chair Powell, which is bringing more volatility usually than the decision, unless the decision was surprise. GDP numbers from Australia. Thursday, busy day as well. We have employment data from Australia of another interest rate decision. This time is from Japan. So I have Australia, Canada, US, and Japan, and UK following up. Let's get there. So Japan interest rate decision. We have employment data from UK, interest, and the Swiss. Wow. That's a busy week. 5 interest rate decision. Again, Australia, Canada, US, Australia, Canada, US, Japan, Swiss, and UK. 6 interest rate decisions. Wow. So employment Swiss decision, interest rate decision from UK, with the minutes and other things, and wow, 7. Sorry, I'm surprised myself. 7 interest rate decision. Also, we have the ECB interest rate decision. Everything in one day. Thursday is going to be crazy, especially in the currencies, of course, and the equities. Wow. So this is, again, let's go through it again, make sure we didn't miss. So this is 1, Australia, Canada 2, US 3, Japan 4, Switzerland 5, UK 6, and European Union 7. 7 interest rate decisions. And for dessert, there's a speech of Chair Powell on Saturday. Wow, busy week. I don't remember having ever 7 interest rate decisions in one day. So this is really historical day here, right? I mean, not in one day, in 1 week. All right. Winners and losers. This is for the week. So as you could see here, the chart starts with energy, heating oil, up 1083, gasoline 1073, crude oil, this is WTI, up 859, Bitcoin up 4.4, cotton up 257, cocoa is bouncing, continue bouncing 2%, soybeans 2%, sugar almost 2%, and corn up almost 1.5%. These are the winners and the losers. Metals are giving in a little bit. You have palladium down almost 5%, platinum 465, silver 3.5, coffee 278, gold 188, and natural gas is actually going lower, down 173%. All right, these are the things of winners and losers, and now we're moving to the charts. I'll bring the MT4 first. As usual, we start with indices, and guess what? The only index that went up this week as a whole is Chinese index. As you could see, we've been selling, and this week when the market actually reached the US indices, some of them reached the low of November of last year. And Chinese index actually climbed above 200-day moving average and closed nicely here. So the Japanese index is sliding, and I think still green for the week. Yeah, still green for the week. Now coming to US indices, not such a bright picture here. Take a look. We started the week with a nice bounce, closing the over the weekend gap, and then the last 3 days were pretty much equal candles to the downside, and we closed. As you could see here, November 24th, the low here was 66.25 We closed at 66.26, almost exactly to the dollar on the level of November 24th. And that's on S&Ps. Dow Jones, similar picture here. If you remember, Dow Jones was really leading this group. And now we've been selling, trading below 200-day moving average, and similar picture here. We are trading the level of the end of November. Nasdaq sold also, but as you could see here, we didn't reach the November price. Actually, we did. Also, November prices here, we actually closed below that November 24th. The low here was 24,361.25. We closed $21 lower than November's level here. So let's see what this week. I mean, it's hard to predict, and it depends how the war goes, what the announcements, and so on. If you remember, I think it was last week when Trump said that the war is almost over, and the market moved to the upside, and then we continue sliding lower here. Here's the Russell 2000 also. We're trading lower, even below, below 200-day moving average. German index, similar story here. We're sliding. The week started really weak. We broke actually through November levels, then we came right back and we closed at 23,358. Also somewhere in November levels. UK is really the only one in a group of European and US indices that's kind of remaining strong. As you could see here, we're not far from 50-day moving average here, and we're really holding strong to these current levels here. And friends, so we spoke about it last week. The way we went up with no reason, we actually dropped like a stone. We came also to November levels here, 78, 76. So these are the indices. Clearly, Chinese is remaining strong. The UK is also relatively strong, and the rest of the indices are selling off. Moving to equities, moving to stocks. A few of them are strong, and as you probably guessed, those are the oil stocks. Exxon is holding very nicely here, and Chevron is even stronger. Chevron is making highs here, as I guess it involved more in whatever it is, helping it to move higher. We've reached on Thursday the high of 198.76. This could be all-time high, I believe. Yep. And these are the oil stocks. Also, banks, as we said last week, they continue sliding. So you could see here, we've been moving lower on banks. JP Morgan 283, Goldman sitting around below 200-day moving average here, 781. We just dropped 200 points from the highs here mid-January. That's a lot. Bank of America selling heavily here. Citigroup is actually holding the levels about around the previous week's levels. So the banks, as you could see, across the board are selling. Let's see what the big guys are doing. Apple, still about 200-day moving average here. If we continue lower, somewhere here, around 240s, we might see some support. Amazon, weak. Microsoft, you remember, I mentioned, I think last week, the market was selling. Microsoft was trying to climb, but this week it just gave away all those gains. Google was the strongest. As of now, it's holding very nicely. This level here, the previous support around 290, 295, 296. So far, it's holding nicely here. Meta, not so happy here. We've been selling. If we continue, we have a checkpoint here around 600 for possible support. Tesla sitting right on 200-day moving average here, closing at 391. We spoke about Nike. Remember, I just said just do it doesn't work for Nike, and it looks like it is not working. We've been selling. This is the third consecutive week with huge gap downs. And if you remember, I mentioned this level here that we might be approaching 52.42. We're about $1.50 away from there. And I think that could be a very interesting price level here. We could stop and hold nicely, But judging by this from here, last time we didn't make the high. So if the market continues lower and we don't hear anything good from Nike, this could be a key point of breaking down. I mean, we've seen stocks going from hundreds to single dollars, right? Everything's possible. So of course, we're not going to guess or predict. We'll just watch how this level is being played around 52.25. So that's on Nike. Let's see how NVIDIA is doing, just to check on it. NVIDIA is right in the middle of this channel that we spoke about last week, between 193 and 170. We are still holding about 200-day moving average. We had few attempts to break below. As of now, we're still holding there. So if we do break 200, so this level around 170 could be strong support. As you could see, a lot of actions around that level, $170. Right, so I think that's it with individual stocks. Let's move to commodities, and then we'll start with winners and losers, which covers probably the most of commodities. So heating oil. You could see here, this week was robust. The week of March, the first week in March, here had a huge spike up and down, closing in red. On the daily chart, you could see here. So heating oil, up week again, up 10.83. Gasoline continue going higher, up 10.73%. So you could see here, we opened the week with the gap, we closed the gap, came right back. If we don't count details, closing right on the level with the bodies of the candles. Crude oil, as we said, we reach here on the 9th of March. The high was almost 120, 119.42. We opened with the gap, had a huge move to the upside, and then sold. Moved all the way to 70s right here. Wow. And came right back, closing at 99.26. So, of course, we could be retesting the highs if situation deteriorates and less oil goes through to that spot that Iran is threatening with the mines and everything else. So we might see actually retesting of 120 and possibly even going higher. So that's on crude oil. Bitcoin, we'll take a look at it later. Cotton had a nice positive week here, up 2.57%. Cocoa, so you could see here, we spoke about cocoa, right? Cocoa, after a lot of selling here, some accumulation, we had 3 consecutive days to the upside, and then we had a little bit of a sell-off. Now the question is this a normal profit taking before we continue higher, or we reach another level of strong resistance and we'll go retesting the recent lows? We'll find out soon. That's cocoa. Soybeans, very strong move to the upside. As you could see here, we've been moving higher since we've been holding the 200-day moving average, breaking through 1168 and continue high here. Soybeans look very, very strong. Sugar had a gap up and sitting on the 50-day moving average here. Let's see if it has some energy to continue. And corn catching up with soybeans, also looking strong here. On the weekly chart, if we can, this is the 3rd consecutive week, not easy, as you could see, huge tails. But if we continue higher on corn, we might be retesting this 490 level and then further up another level here. So that's on corn. So these are the winners. Let's move to the losers. Palladium has been, we remove this line here. Palladium is on the way down. We have a few things, as you could see here, with identical lows here with double bottom. And we could be coming to retest here, and maybe 200-day moving average could be catching up with us here. So around 1519, 1520, we might see retesting this level here. Platinum. Platinum broke through 100-day moving average here. So you could see here, well, we had this double bottom here. It now became almost a triple bottom. Let's see if we're holding here. If not, we have a way to go to the 200-day moving average, possibly. Again, we could have a turnaround. Maybe the metals will be hot on Monday. We'll just turn around and everything's going to take off. So that's platinum's down 4.65%. Silver as well, after this huge journey to the upside, has been selling lately. So you could see here we close at 80.55, down 3.5%. Let's see what this week will bring for silver. Coffee. Remember we mentioned coffee. That's a strong support here. It looks like resistance is also strong, around 295, 296. We couldn't break through it, so we're right in the middle of this range. Coming to gold. Gold is playing with 50-day moving average here. It's actually stayed clear of 50-day moving average besides this tail. Now it's getting really close to it. So let's see if sellers will manage to push through the 50-day, and we might see the sell-off. Or again, the buyers could come in and they'll say, okay, we're moving higher. We'll follow up with gold. Gold down 1.88%, much stronger than palladium, platinum, and silver. And we have natural gas, which opened the week with the gap and then closed the gap, trading or closing around 313. That's on natural gas. So these are the winners and the losers. Now moving to FX, again, to remind us, we have 7 interest rate decisions this week. So the FX world is going to be busy. Now, dollar has been super, super strong. And of course, the reason is the price of oil, and the oil is being dealt with in US dollars. So as the price goes higher, the US dollar gaining strength. We just broke through this level here. A lot of power to the upside. This level from November, we just broke through it, closing higher. And Friday, we almost closed at the highs. Super, super strong. So you could see on the weekly chart, you see it nicely. We just broke through strategic level. Now the question is, so you could see a lot of things happen around this level. Of course, 100 psychological level, not just technical here, right? So the question is, will we start building support or go straight up if the oil skyrocketing, or we break back down and go to correction? It's going to be very, very interesting to watch US dollar this week. Now, the majors, as you can see, this is the weekly chart. Euro just broke. It's a mirror image. Pound also have 4 consecutive weeks to the downside. Australian dollar, it looks like finally it's trying to give up against the US dollar. Has been super strong, and we are at the very strong level here, 0.6940s. This is the level from which we had the big sell-off. So if we break below and start building resistance, we might actually continue to the downside. New Zealand dollar, weak, 4 consecutive weeks to the downside. Dollar Swiss is trying to come back into the channel, as you could see here. This is the weekly chart. Just want to show you the big picture. So we've been in this channel pretty much since entering it in June of last year. So from June to January of this year, 6-7 months, we've been trading in the tight channel that we broke below. Now we entered straight back in. So this is a big thing. we could be playing in the channel. We could be retesting the top of this channel, which is 0.81. And first, we want to see how we act around 50-day moving average here. USD CAD this week was positive for it. Of course, CAD is also, I think it's number 2 strength-wise after US dollar. We'll take a look. I'll show you the Canadian pairs now. So USD this week was much stronger than Canadian as well. And dollar yen, we broke through this 157 level. We could be marching here to the highs of June 30th, which was 161.94, almost 162. All right. Now I wanted to show you the Canadian pairs, right? Ready? Here we go. So you could see, because of the price of oil, we had strength of Canadian dollar here. Australian euro sold heavily against Canadian dollar here. Pound sold against Canadian dollar. New Zealand dollar sold heavily against Canadian dollar. So because of the price of oil moving so aggressively to the upside, you have a strength of US dollar and also Canadian dollar, as Canada is involved in producing oil. And US dollar is the currency that the oil is being bought and sold for. And let's just take a look at yen. You could see Canadian dollar is stronger. Swiss, let's see, switch for daily chart. As you could see, a triple top. So the big question, the $1 million question, did we really reach the top and refuse to go higher? And now we can start selling. Swiss yen, it's very interesting pair to watch. We'll take a look at it. Euro yen sold on Friday. We're at the bottom of this channel here. You can see it visually. New Zealand sold the last 2 days. So just to kind of summarize the currencies, you have US dollar looks the strongest. The single strongest could be Canadian dollar, both because of oil. Yen is trying to recover. And this week we have 7 interest rate decisions to watch. So that's as far as Forex. And let's take a look at crypto. As we said, Bitcoin had a move up. This is the weekly chart. As you could see clearly, Bitcoin had a positive week. We're trading currently around 71.5, trying to break through 50-day moving average here, trading right on 50-day moving average. XRP, it's holding. If you remember last week, we said this point at 1.34, it's been holding steadily. Let's see if we manage. It's a lot of accumulation in a very tight range, right? I mean, not so tight, it's 10% of the price, 13 cents. Range and a lot of accumulation. So if you manage to break to the upside, we could see some acceleration, and the same could happen to the downside. A lot of goods accumulated here. And let's take a look at Ethereum. Ethereum, similar picture. We spoke about it last week as well. We are trading the tight range, trying to fight this resistance and the 50-day moving average here. That's it pretty much. Let's just take a quick look at the calendar again, just to show the significance of this week. Again, 7 interest rate decisions. We start with Australia, Canada, US, then Japan, Switzerland, UK, and EC, European Union, the ECB bank, right? European Central Bank, and Powell's speech on Saturday for dessert. So it's going to be a super busy week. You have winners and losers that sometimes they tend to reverse the following week. Sometimes they continue the trend. All right, busy week. I want to wish everyone a great weekend, whatever's left of it. Get some energy, spend some quality time with your loved ones, prepare yourself for the week, have a plan, manage your risks, and have a wonderful and successful week. And don't forget about social media, subscribe, click on those bells. If you're watching it on YouTube, don't forget to click likes. Doesn't take long, and I think it helps other people to watch it as well. Thank you and have a great week. All the best.